Welcome. This is Earnings Edge on NDTV Profit. Just a while ago, we had earnings from TCS, and now we have earnings from another heavyweight from the information technology sector, and that is Infosys. At the moment, we do have consolidated numbers. The consolidated revenues do look very much in line with street expectations, and it is the same for the consolidated net profit as well. So not too much, turning around, and there aren't exactly too many changes either with respect to the kind of trajectory we have as far as these large cap IT earnings are concerned. Even in terms of TCS, the numbers do look largely in line with street expectations. The question really isn't as much about the quarter gone by, because we do know that this was a weak, seasonally weak quarter on account of large furloughs and also weak demand, and also a little bit of delay in terms of deal signings, which is why we weren't exactly expecting a very, very robust quarter coming through. That's largely played out to script if you also look at the way things are panning out with respect to Infosys, at least in terms of the bottom line. As you can see on your screen there, a profit of a little over 6,100 crores against the Bloomberg estimate of just as much. And in terms of consolidated revenues, we're looking at that standing at around 38,800 crores against the Bloomberg estimate of 38,700 crores. So there hasn't been too much deviation, which also is good news perhaps, because there aren't any negative surprises as far as either of these companies go. Among the many things that we would like to keep an eye on from the management and the kind of commentary that comes through is, of course, one, the business environment, specifically with respect to the US and Europe. What kind of traction are we expecting? What is their clientele telling these companies? What kind of conversations are they having around the different segments? What kind of business has the legacy segment well rendered as far as some of these companies go? And what can you tell us with respect to the digital aspect, the digitization of the business goes? And of course, the new buzzword, or artificial intelligence. What kind of contribution does that make now at this point in time when it comes to some of these large cap companies? The question really is that can we expect, one, a better fourth quarter? Two, can we expect some sort of a semblance of what we can expect going into FY25 is the other big question that we will ask. Remember that a lot of companies and a lot of the clients for these companies will start firming up their budgets and spend, discretionary spending that they want to employ towards their own businesses. And that will, of course, have an implication when it comes to information technology companies like TCS and Infosys. That's the other thing that we're going to keep an eye on. But on that note, let's get in an analyst. Let's see what the street makes of these numbers prima facie. We have Rahul Jain, VP and Research at Dolat Capital, joining us. Rahul, good evening. Thank you so much for making the time out. What are you making of TCS? Let's start with that. What's your initial take on Tata Consultancy Services?
Yeah. If you look at the TCS number, of course, what we saw is that there is a kind of an inline revenue performance and slightly better on the margin side. Only thing to look into this number from a commentary point of view, which we will hear, is that the TCV signing was not very exciting in this quarter. Understand Q3 is not the quarter where you get bigger deals, but yeah, that thought process on that would be something crucial to watch out for to understand how things would shape up from here. So from a pure result point of view, it looks like a non-event for TCS, but order win and accordingly what they have to say for Q4 or beyond is something what we need to watch out, because the growth is led by smaller segments, and bigger segment like US and BFSI still is negative for the quarter. So those are bigger pieces. If we have a better thought process there, then probably outlooks seems better. Otherwise, it's status quo kind of a thing in our view.
And Rahul, your assessment on Infosys, which has also come through, is this more or less in line with your expectations once again?
Yeah, here as well, a similar trend we are observing, which is like the revenue is broadly in line, margin is slightly better. They have also narrowed down the guidance band which kinds of implies closer to 2% negative growth for Q4 for the lower band to be achieved, or flat revenues for Q4 to achieve the top end of the band. So that is what people would like to try and understand, that if it's going to be a minus minus quarter and again, then it's not an encouraging sign. But if they have to achieve the top end, and if they do 0% for Q4, that's not exciting either. So again, the view in terms of how things would shape up, especially there was a deal cancellation also that was announced during the quarter. So anything on that light for a CY24 perspective would be something close to watch out for.
Of course, we do have the guidance for Infosys flashing up on your screen there. And as you can see, and as Rahul has also pointed out to us, that the growth guidance band has narrowed further. Well, based on that, we really can't be expecting too much out of the fourth quarter, as also pointed out by Rahul at the moment. As far as Infosys is concerned, their large deal TCV stands at around $3.2 billion. And of course, we're going to get more color in terms of the kind of traction they are getting from their clientele. But Rahul, you know, from the conversation that we are having and from what we make out, at the moment, I reckon that even Q4 will not be as relevant. I suppose what is going to be more important is FY25. Going into what is also an election year for the US, it seems to suggest that companies may be hesitant to perhaps take decisions because of the fact that there could be some amount of uncertainty with respect to the politics in that region too. Do you think that's a possibility? And on account of that, do you think that even the first couple of quarters of FY25 could be under some sort of a cloud, pun unintended?
Yeah, so that kind of thing is a possibility, and I would not give too much weightage to the U.S. election, but more to the macros. We all know that there is a big opinion divided still on the hard landing versus soft landing, and we don't know where it's going to shape up. So from that perspective, to expect anything miraculous to happen over next 6 months, I don't see would happen. And if we go with a similar sentiment post Q4, then the guidance that Infosys may announce for FY25 may not be very exciting either.
Right.
So that is what one should be looking forward to in terms of any cues we could get there. But seems very unlikely that the commentary would be any positive. But for now, we can say no bad news itself is good news for now.
Yeah.
But yeah, so commentary we have to give a higher weightage, because that's kind of sets tone for how one should perceive here on.
Right, absolutely, Rahul, I agree with you. No news is good news. But a final question then, Rahul. I know that you will be waiting for the fine print. You will also be waiting for management commentary. But at the moment, what is your rating on both TCS and Infosys? And based on the kind of numbers that you are looking at, do you think there would be a change in their rating or target price?
Yeah, we've been negative for some time, and if you see what has happened is through the year the price has gone nowhere. It's keep moving, has come back to the similar price that we saw today. So it's kind of getting derated. Infosys is kind of getting derated versus the other two larger peer like TCS and HCLTech, where the discounts have been narrowing in case of versus HCL, and for TCS it's widening. So Infosys has definitely been an underperformer, and we have a sell view out there. For Infosys, for TCS as well, we have a reduced rating, but yeah, it's relatively more stable bet, both on a relative basis and absolute basis.
Right. Rahul, just stay with us. We also have my colleague Sajid Mangat, who is going to give us an on-ground, reading of what's happened, at least as far as TCS is concerned. Okay, I think he will join us in just a bit. Well, okay. For now, let me just very quickly recap what's happening as far as TCS is concerned as well. There you have it. That's on your screen. That's, of course, Infosys. And we are looking at a decline of about 0.5% coming in. TCS, in terms of the revenue, we are looking at a 4.5% uptick on a quarterly basis. And of course, margins have seen a little bit of an improvement. That's something of a positive. And we've seen about 1.5% growth as far as sequential growth as far as your revenues are concerned. The real question also comes down to the dollar revenue growth, because whether or not that has translated, because we must remember that the street was anticipating a dollar revenue decline, sequential decline. And that is something, okay, so we have in fact seen a sequential decline, at least as far as Infosys is concerned, to the tune of nearly 1%. And in terms of your operating margins guidance, well, that's coming in as far as Infi goes, well, that's also largely in line with what we were expecting. The question really is that what do we do and where do we go from here? And well, that's what you have with respect to TCS. Well, on that note, I'm going to take a small break, but as soon as, okay, I think I will hold on to, I think I'll hold on and I will address the numbers in more detail. I believe we do have Sajid Mangat who's joining us at the moment. And Sajid, your on-ground reading, what are you making of this?
You know, the TCS numbers are slightly better than expected, including if you exclude the provisioning of $125 million made for legal expenses or the legal claims in the quarter. It seems to be you know, better than expected on the bottom line. And top line is we expected a flat top line, and that's what has happened. But what is interesting to find is that they've been able to expand their margins by 50 basis points in the quarter, and kept and managed to keep the attrition at around 13% for the last 12 months. So that's you know, that seems to be a you know, good set of numbers. And I think the speed, if you look at how the TCS stock was there today, it was up. Infi, you know, it's still a disappointing number, both on the top line and as well as on the margin front. They have narrowed the entire guidance to 1.5 to 2% from 1 to 2.5. So, you know, that's something was disappointing, because the street was expecting that guidance may remain unchanged going forward. Though they have, you know, come out with a TCV number of $3.2 billion in the third quarter.
Okay. Well, we're awaiting the fact sheet as well, which would give us an idea when it comes to what we've done in terms of geographies, what we've seen in terms of the various segments. And BFSI, of course, would be the top of the list for both TCS and Infosys. But Sajid, thanks for getting us that quick update. And of course, we're going to continue to keep an eye on both the managements who is going to be talking to us for Infosys as well as TCS a little later on in the day.